All right, I got my buddy Randy Hatada here on the Market Pulse. Randy, tell him who you are, where you're from.
Well, thanks for the invite. I'm Randy Hatada, and my brokerage is Expand Realty. Been around 15 years, and just as of this year, 5-star property management.
Awesome,
Yeah.
awesome. So there's exciting news there. So you do a little bit of everything. That's why I invited you on. You do property management as well. What are you seeing in the market?
Well, I see what you see. Right now, it's a slow market on both sides. We're facing the challenge, and really the name of the game right now has been education, and our whole emphasis has been educating our consumers. Like, here's what's going on, and being more of a consultant more than a transactor.
Yeah. Do you follow the news? You see the...
Try not to, but
Oh, man, it's tough. I try to tell our agents, and I share this with anybody that I coach, is like, you need to be the news. You can't let the clickbait and, some of those, papers and things be the news. You need to be in front of your sphere and your client database being the one saying, here's what's happening in the market. Because if they read the newspaper, it looks like the sky is falling.
I'm 100% on the same page, and that is the message. And my biggest thing, it's the news is the news. They're selling gloom and doom, and it's not even accurate. That's the problem.
I know.
For me, it's like, I read an article on the RGA, or I read an article recently, I'm sorry, and it said, market about to crash, no buyers in sight. Well, in my opinion, that's false. The buyers are everywhere. They're just not pulling the trigger like they used to.
Yeah. So NODs are like 60,000 month to date or something, and I did the math, like in 2005, they were like 600,000. Like we're at like 10%.
Another article said foreclosures up 30%.
Yeah.
Off what? Off 1%?
Yeah, I know. Like historically speaking, these numbers are very, very low, but they get the clicks. So you also do property management. We
do.
dived into this term, accidental landlord, right? Define that to, this is for members. They're here to get a little information. Tell me who an accidental landlord might be.
I mean, there's many situations, but recently there's been a lot of sellers that tried to be sellers. It didn't sell in a timely manner. Mortgage is catching up, and they're forced to turn them into rental property, and we see a lot of that right now.
Yeah.
Mainly that's the reason. That's the number one reason by far.
Sure. So having that property management arm, you're able to offer that secondary service to these sellers because you're like, look, you wanted X for the home. You were stuck on that price. I advised you that you probably need to be lower, but they were stubborn. And you said, okay, so if you don't want to do that, here's your other option, right? Like, fix the house up, get it ready for a tenant, and manage the home for you and revisit this in a couple years.
This is true. And, it's for two reasons. One is maybe they're forced into it in the fact that their numbers didn't work for the sale. But the second reason is, I just won't sell for less than X, right? And we see a lot of that.
There's no desperation. The sellers are stubborn. Many of them own them in cash or have sub 3%. So they're looking at you going, Randy, if you can't get me top dollar, this low mortgage rate or having no debt at all is an asset. And I'm not willing to give it up.
For me, like when we consult, there's accidental and then there's premeditated, meaning that they've been through the consult, they've thought it through. And in many cases, it makes sense to hold, especially with those 2.5%, 3.5% interest rates, positive cash flow. Most of us believe that the future of Las Vegas is very bright. It's just a matter of how long are we going to wait. And so we create investors. And for people with those mortgages, in those cases, it makes sense.
Yeah. There was a story on the stock channel the other day. The CEO of Invitation Homes, Dallas Tanner, was on. I think they manage like 60,000 or 70,000 doors. He was saying they don't call them tenants, by the way. They call them residents. I like that.
Yeah, residents.
Yeah, there are residents.
Use the same language.
Yeah, that's great. And so the residents are staying 40 months. They're renewing. They're not bumping high because they're watching these accidental landlords come into the market, which is kind of adding rental supply, which is kind of like stabilizing rental prices. Because we had that crazy wave, right? When it went from like 2000 to 25 or whatever. And I think that wasn't sustainable.
I think the name of the game right now is retention. I mean, the rental market is just as slow as the sales market currently. When you factor in vacancy periods and all of that. It just makes sense to maintain the tenant, even if you're not raising rent or even giving them a little bit of a incentive or discount to keep them. Good tenants are hard to come by. Another huge trend that's going on right now is a lot of false applications and a lot of
Fraud.
fraud. More than I've ever seen in a very long time. 20 years. We've seen more unqualified applications than we've seen in a very long time as well. So we're dealing with that as
So
well.
you got a lot of work to do on that end just to get through to find the real ones and then the qualified folks.
A lot of work, a lot of screening, and that leads to vacancy time for investors, right?
So fast forwarding, so looking at the market in the fourth quarter coming up, rates have stabilized a tad. I see the market kind of picking up a little bit. Like the summer could have gotten worse. We could have gotten closer to 2,000 closings versus the 2,500-ish. I'm pretty happy that it's, I mean, of course, we all want more units.
Right.
There's 15,000 of us doing this business and we're only closing 2,500. That's tough. But it could have been 2,000, right?
Could have been. I mean,
You
we
think we
started
get-
that way.
I know. Do you think we get to 3,000 ever in the fall?
I do. And my opinion is that what I'm hoping for is some kind of snowball effect. Where are all these buyers that we're used to? Where are all these 40,000 people coming from California staying right now? Is it sustainable? Probably not. They're probably in someone's third bedroom, Airbnb, or at a hotel, and they're holding out. They're either going to have to rent or they're going to have to purchase, and when will that happen? And I think it's up to us realtors to educate them on the timing.
You find that your residents are in hospitality, and if you read those same news media articles, they're saying that the strip is dead. They show the slots are empty. And I ask my executive friends that are at casinos, what they tell me is they're not lowering the room prices, because let's say you have like 5,000 rooms and you can get, $400 a night or something, and then no one bites. So then they go to 300, they go to 250. Rather than lower the price, they keep it up and they run at like 60 or 70% occupancy. They don't stress the machine. They don't have to clean as many, but the customers they have are a little higher end.
Higher quality and,
Spending more. Are you worried that the residents and their income and the tips and different things that fuel the property management business could be affected? Like, what's your view of the economy?
It is being affected. I mean, we've seen the changes in income statements or whatever they have to provide. And quite frankly, we've seen people being laid off, and, it's affected the ability to pay their rent and all of the above. So we've seen a little bit of it, enough to where we follow it and obviously, watch that trend.
Sure. See, everybody out there that's watching, this is why these are important. This man manages 1,000 doors at his company. That's a small piece of our local economy. He's seeing what's happening. Folks are either making less year over year, they're getting less shifts or less hours, or they've been laid off. It doesn't mean the sky's falling. It's not happening to everybody, but it's not all the way up. You know what I mean? So like when you're talking to a seller that's like on the fence on what the price should be, you might want to factor in what you're learning on the segment like this about what the economy is actually doing.
Well, a lot of the reason we're seeing what's happening is that, quite frankly, our relocation residents have pushed the numbers up, just like sales, right? And is it sustainable for our locals? That's kind of the question out there. We're at like $2,475 a month average rent.
So around $2,500 for average rent.
Just shy of
It's
$2,500.
a lot. And you need 3x that to qualify roughly, right? So you're talking like $7,500 roughly. So you're talking $100K.
$100K.
Yeah, so 250, 60-40 or one good job.
Your average family is not at $100K. And so we're dependent on a lot of California money on the higher end of rent. And if they're not pulling the trigger right now on rent, then obviously affects the entire spectrum. Things are sitting a little longer, thus accumulating inventory, similar to sales. So I don't see California slowing down. It's just a matter of, again, making decisions long term. And thus you see a lot more like Invitation Homes, a lot more renewals.
Sure. They're keeping the prices down to keep them in, right? They don't want to push them out.
Well, also residents are not confident to move yet. They want to buy maybe, they want to move maybe, but they're not confident on what's going to happen. So the safe thing to do is stay where you're at and renew.
Yeah. It's always a slippery slope when the property manager calls the owner and says, term's coming up, they want to stay, what do you want to do? They haven't missed a payment. They haven't called for one repair. You're probably thinking leave them be or small bump. The greedy landlord that wants to scale, we all have those. I mean, they want to push them, 10%, $200. And then, so if you go too high, you lose them. Then you got to spend $7,000 or $8,000 to turn the place, right? And then you got downtime. And so what's that sweet spot that the resident's willing to stay because they don't want to cost money to move to, more deposits? How do you navigate that conversation? Do you go back and forth? You try to talk some sense into them and bring a reasonable number that will be accepted? Like, what is your strategy as a property
It's
manager?
really just investor talk, coming from experience, putting yourself in their shoes. It simply costs more for a turnover or, vacancy period than it is to maintain a tenant, especially finding another good one. That's a challenge in itself. So, it all favors, again, renewing the tenant. And even if you need to offer that tenant an incentive to stay, I feel like it's worth it. Even if it's moving the needle on the rent in the downward
Or half a month free or something.
whatever it is.
Yeah.
Whatever it is.
Yeah. So anyone out there watching, that's good advice if you're a small property manager. Reasonable terms for your residents in there. Wrapping up, we always have new agents that join or agents that are trying to build their business. What do you think about showing rentals and how to build the business off of showing rentals? I know it's not easy money, it's fast money. Is that still something that you think someone who doesn't have a big sphere, moves from out of town, comes to town, should try to work?
100%. I think that's the most underestimated opportunity in our market. But you have to have the binoculars. You can't look right in front of you because most residents want to be homeowners. And, it's basically creating those relationships, working hard at their confidence and trust, and turning them into buyers, thus, in the future, maybe even investors and multiple transactions in the future. So if you're looking at from a transactional standpoint, it all makes sense long term, and that's building your career. To me, that is what I would consider a different format of farming. It's planting seeds, and now you...
Sure. But then it's communication with that resident, because sometimes they do the work, they find them the home, they get that quick little check, and then they don't check on them in month like number 3. Say, hi, how you like the home? How do kids like school? How's the dog? 6 month, 9 month, hey, are you going to renew? Like, you can't wait for them to basically get a call from you or one of your agents or your company. You know what I'm saying? Like, it's all about follow-up.
The longer it takes, the harder it gets, and the more uncomfortable it gets. So yeah, you need to stay in tune, just like any relationship. And to me, it's the same with listings. To me, it's weekly updates and explaining what the market is, giving them the precedent that this is what to expect, and just giving them the data and what you're doing. And that way they stay confident in you and they don't point the finger at you. But it's when you go silent, it's like, oh.
Yeah. So anyone out there who's showing rental homes and putting people, residents in these houses, remember we told you early on, be the news. Every time you see a news article, consume the information, find out if you think it's true, get the real numbers from us wherever you can find it, and then call your resident that you place and say, by the way, if you're watching the real estate market because you're preparing yourself, here's what's actually happening. You need to be the source of information and take basically those other portals and newspapers and whatnot out of the picture.
Yeah, and I like what you're doing here because one step further, everyone can get the data, right? Everyone can get the numbers nowadays, but it's the consulting and the articulation behind what the numbers mean that people need. That is what really people need because the news goes by trends.
Sure.
And it's not always the right trend.
Sure. So wrapping up, it's a healthy market. If you got someone who wants to sell a home, there's seller's market. If you want to put a home for lease, you can find a resident. If you're a buyer, if you got a buyer looking for a house and they're qualified, there's plenty of homes for sale. I mean, this is a great market for a real estate agent to work.
I think it's mindset, like a lot of people are looking at it as a down market or not a positive market. But if you look at the numbers, we're not that far off at a 3.5 month supply. And I say stay positive. It is a healthy market, a lot of opportunity out there, and stay focused on today. A lot of people are waiting for the market to change. I don't think we can do that. I think we need to focus on what can we do to move the needle today.
You said it earlier, plant the seeds. If the market changes and you haven't planted the seeds, those seeds are going to grow somewhere else.
And one day you have a crop to harvest. I love it.
Thank you, Randy.
Oh, it's my pleasure.
You got it.
Thanks.